So grab your headphones, let the journey start. With Suzy's Vegas tales, she's stealing the heart. In the city of dreams, let's laugh and play. Suzy's Las Vegas podcast, come join the sway.
Well, hi there, we're back again. I've got Rey Gallegos from American Pacific Mortgage, and I had him a couple weeks ago. It was so good, and everybody wanted to hear more about it. So before we start, be sure to like, subscribe, and share. You guys watch this anyways, but it sure means a hell of a lot to us if you click the subscribe button and you share it. So Rey, let's talk. I've got more questions for you.
There's a lot of questions out there right now. That's I mean, it's a crazy
I don't know
time.
where to start first, to be honest with you.
Well, I mean, I think, you know, probably the biggest thing going on right now is this tariff war. I don't know what you want to call it.
Yeah, nobody knows what to do. So what do we do about this?
This is, you know, we're in uncharted territory here.
Yeah.
I'm not sure there's ever been anything along these lines.
No.
And of course, you know, we're here to talk about mortgage, so I'm going to talk about how you know, this tariff, you know, situation has an effect on mortgage rates.
Right.
You know, kind of to start off, you know, there's three major markets. There's the stock market, the bond market, and the mortgage-backed securities market.
Okay.
The mortgage-backed securities market is where we get our interest rates from.
Right.
And with rates being so high, everybody's extremely sensitive to this because it's affecting people's purchasing power.
Yeah,
you know, those rates being so high, the payments are high, they can't afford them or they don't want to afford them.
Right.
So this whole tariff situation has just kind of thrown a wrench in the works. Now, the way the markets work, when there's fear and uncertainty in the world,
like now,
like right now, exactly. What the entities that invest large sums of money into those markets do is they take it out of the more volatile market, which is the stock market,
right,
and they move them into the treasury bond market and the mortgage-backed securities market because those are more stable.
Okay.
So typically when fear and uncertainty is going on and there's sell-off in stocks like there is right now, the mortgage rates get a little better and the treasury bond market gets a little bit better. But what's happening right now is the sell-off has been so huge, you have margin calls on these large the entities that invest a lot of money. So they have to get that money from somewhere. So they're actually taking them from the bond market because it's a more liquid market to pay their margin call.
God.
And so we haven't gotten the benefit that we normally would when the stock market drops.
Right.
We haven't gotten the benefit in rates. Now they're still coming down, but not at the level you would typically see when the stock market drops as much as it does.
Yeah.
So
for 3 days, or 4 days now, it's been like a
at some point today,
like a yo-yo.
last I looked, it was like up 1,600 points, and then it closed at like close to 600 or 700 or something like that.
Yeah.
That's the last I checked. That's just unheard of. I mean, that's crazy. And so right now, it's very difficult to try and calculate what's going to happen with mortgage rates.
Right.
We're hopeful that they continue to go in a positive direction for us, meaning rates come down.
Yeah.
It looks like all of these moves that's being made by this administration is going to start driving interest rates down. And when I say interest rates, I'm talking about the rates that the Fed controls. Because remember,
we talked about that 2 weeks ago.
The Fed has no control over mortgage rates.
Right. I wanted you to reiterate that.
That's what everybody believes.
Yeah.
Okay. But they have no control over mortgage rates. They control what's called the Fed funds rate.
Okay.
The Fed funds rate is the rate that banks borrow money from each other to cover their overnight reserve requirements.
Right.
Okay. And there are times when a Fed drop, when they drop the Fed funds rate, correlates with mortgage rates going down, but sometimes it's inverse. In September of last year, the Fed dropped the Fed funds rate by 50 basis points, which is a half a point.
Yeah.
And mortgage rates spiked up for the next month. So it's not not a situation where they're always aligned.
No. So if you were a gambler, you couldn't really bet on that, is what you're
Well, and you know, I think that's important because we're talking about mortgage, right?
Yes.
It's important that people understand you don't want to wait. If the Fed says they're going to cut rates and you're waiting to buy because you think rates are going to come down, it's not always like that.
No.
So if you're sitting on the fence waiting for the Fed to cut rates, that's not necessarily how mortgage rates are going to come down.
No.
So, you know, it's something you definitely want to talk to if you have a real estate agent or a lender. You want to talk to them and get a good understanding
Right.
of where rates are going, because we look at different factors, not what the Fed does with the Fed funds rate when it comes to mortgage rates.
Wow. Well, you know, I want to ask you about a DSCR.
It's super popular
Yes,
right now.
yes.
Yeah. So that's an
Please
investment
explain,
property loan.
you know,
yeah,
because
so
I'm sure everybody wants to hear more
absolutely.
about
So one of the things over the last couple of years, even with all the turmoil,
Okay.
one of the sector of purchases that has not dropped off and is actually ramped up
Right.
is people buying investment properties. They can't purchase enough. They will buy as many as they possibly can. The problem is due to certain loan guidelines like Fannie Mae and Freddie Mac loan guidelines,
Right.
you can only have so many properties that you own that have financing on them.
What is it for each one, or is it like
For each investor, the
many?
maximum is 10 finance properties.
Okay.
Yeah.
All right.
So if you want to build a portfolio of real estate,
Okay.
once you get to 10, you either have to pay cash or find a different source. And so this DSCR loan,
Right.
okay, it's called the debt service coverage ratio loan, has
Okay.
been a really good solution for this.
Yeah.
And we qualify it differently than looking at your personal income and your personal debt, because we don't even look at personal income and personal debt.
Yeah, I like that.
Yeah. Well, yeah, I mean,
Yeah.
because investors, I mean, they're complicated.
Right.
Typically, especially if they have an investment portfolio above 10 properties,
Right.
they're going to have assets, they're going to have properties, they're going to have LLCs, they're going to have all of this other stuff.
Correct.
That in a typical loan transaction, we would have to document every single bit of that.
Wow.
And it's frustrating for
I
them.
would think
I mean,
so.
it really is.
Yeah.
And when someone has that much, a lot of times they're like, well, why are you asking me for this? I'm qualified, right?
Yeah.
So this DSCR loan has come in and filled this void because it's so easy to qualify for. The way it works is this.
Okay.
So when we do an appraisal on an investment property,
Right.
we order an appraisal, and then we order what's called rental comps and surveys. And what that does is the appraiser comes out and looks at like properties in the area that are being rented,
Right.
and comes up with a number that they feel that property can be rented for. We call that the anticipated rental income.
Okay.
Okay. So then we also look at the subject property housing payment. So this is the property that's being purchased as an investment.
Right.
All debt that comes with the purchase of that property. So that's the principal, the insurance on the mortgage, or the principal and the interest on the mortgage,
Right.
homeowner's insurance, property tax costs. If there's a homeowners association fee,
The HOAs.
HOAs.
Okay.
If there's a master plan fee,
Okay.
sometimes there's special improvement district, local improvement district, SIDLIDs they call them.
Yeah.
And so any debt that comes with that, we put that into what we call the subject property housing payment.
Okay.
So as long as the anticipated rental income is more than the subject property housing payment,
Right.
it qualifies. That's it.
Really?
We don't
That
look
quick,
at
that
we don't look
easy.
at income for the
You heard it
borrower.
here. Yeah.
We don't look at debts from the borrower.
Yeah.
We do pull a credit report only for the credit score because that's what affects the interest rate.
Okay.
But these
So
rates.
they still need to put in their social.
Oh yeah, we
Yeah.
still do
Yeah.
a normal loan application.
Okay.
We still pull a credit report.
Yeah.
And that credit score is what we use as the driver of the rate and fee. And so, but with a good credit score, these rates and fees are comparable to Fannie Mae, Freddie Mac investment property
Really?
rates. Yeah.
Well, that's good to know.
Because so many different servicers are buying these, it's become very competitive. A couple of years ago, it wasn't
Yeah.
like that. These rates were a little higher, lot higher than
A
the
lot
Fannie Mae
higher.
loan.
Yeah.
But because there's so many end investors that are buying these now,
Right.
rates have come down because they're competing with each other because they want the volume. And so now you can get one of these DSCR loans. You can get it with comparable rates to a Fannie Mae, Freddie Mac investment property with 1/10 of the headache from
Yeah.
a paperwork perspective.
Wow.
Yeah, I mean we
Well,
have.
then it makes it easier for you too, doesn't it?
It does. Plus, they're quicker.
Yeah.
You know, usually we need 30 days to close a loan ish.
Yeah.
You know, so we can
Yeah.
do it less. But with these loans, we can. I mean, we've gotten them through in 15, 20 days easy.
Oh, that's wonderful.
Yeah, and so you know, so especially investors that are trying to, you know, get as many properties as they can, they want to move fast.
Yeah.
And they don't want to be bogged down with, you know, this transaction,
Well, sure,
that
and all
transaction.
these
They want
other
to close
problems,
and they
yeah.
want to move on.
Yeah.
And so this DSCR program has come in, and I mean, I got involved in it's called a non-QM loan.
Yeah.
That's the sector of loan that the DSCR loan is in. I got involved in them probably 6-7 years ago. I started digging into them a little bit. I didn't know if they were going to stick around or not, but over the last couple of years, they've come back, and
they're
it's
really
been a
hot.
big part
Yeah.
of mortgages. 3 years ago, they represented, for the whole industry,
Like the
they
percent.
represented about 2% of the entire
3 years
industry.
ago.
3 years ago.
What about now?
2024, 14%
Wow.
of non-QM financing.
Yeah.
And so it's here and it's real.
Yeah.
And there's a
Your
ton of lenders.
company
that are-
does a lot of that.
Oh
though.
yeah, we do a lot
Yeah.
of that.
Well, that's good.
My team in particular,
Yeah.
you know, I was lucky enough to get involved, like I said, about 6-7 years ago, to really dig in. Some companies haven't really embraced it yet.
Yeah.
You know, we did.
Maybe they're a little afraid of it. Yeah.
Well,
think?
new things are scary, right?
Yeah.
And so
Yeah. There's a lot of new things.
especially with lending institutions,
Yeah.
you know,
Yeah.
they want safe, they want secure.
Sure.
So you know, until you know for sure these things are working, some lenders don't embrace them. But these, I mean, we're talking about investors that are very well qualified. They have you know, lots of assets. They have good credit scores. They have investment portfolios. I mean, they have a lot, and so why wouldn't they,
Well,
you know,
sure.
pay their bills?
Yeah, I mean,
you know?
if you can do that, why not do
Yeah.
that? You know, I'm going to ask you to put your thinking cap on here.
Uh-oh.
0% interest.
0% interest?
Yeah.
Like, you mean like a zero down
Yeah,
home loan? You mean?
zero down.
Oh yeah. Do we have them?
Yeah.
Yeah, they're still around.
You really have them.
Yeah, down payment assistance programs.
Zero.
So
Okay.
we have a couple
I wanna
different
hear
versions.
this.
Okay, so down payment assistance programs are just like it sounds, right?
Yeah.
They assist people that are buying a primary residence
Yeah.
with down payment and or closing costs.
Okay.
Okay. And so there's a lot of entities that do down payment assistance programs. There's, you know, the federal government, state government, local municipalities like the city of Las Vegas, city of Henderson, city of North Las Vegas, nonprofit agencies like the Nevada Housing Division,
Yeah.
Nevada Rural Housing Authority.
Okay.
They all have different programs that they offer. There's, you know, the Culinary Union has a really
Yeah.
good down
Oh,
payment
they
assistance
do?
program. Oh
Okay.
yeah, and that's one of the better ones.
Okay.
And so, you know, we have them out there. The inherent problem with some of these down payment assistance programs is that the way they give you the down payment is they deliver an elevated interest rate. And with the elevated interest rate,
Okay.
they
So not so good.
well, they get extra revenue, and that's what they give you for your down payment assistance.
Oh, okay.
So, which is fine if you don't have another option,
Right.
but it makes the payment more like
Yeah,
a lot
I would
higher.
think so, yeah.
And so if you're needing down payment assistance, you might not be able to afford an extra, you know, $200-300 a month in payment.
No.
And so it's kind of counterintuitive.
So it's one or the other,
It's-
really.
yeah, and so we have them, and
Yeah.
they're still out there. Now, recently, some lending institutions have come out with basically just a second mortgage, but with no payment.
Okay.
On an FHA loan. So the rates aren't elevated on the FHA loan. It's just a second that's
second
fulfilling
mortgage.
the 3.5% down payment. And so those have been very advantageous to our customers. And we've been
What is it
looking at a
called?
lot. Well, it's just there's just lending institutions that just put them out and they offer the second.
Okay.
So it's really not like a specific program.
Okay.
It's just you know, if someone comes to us and says, "Look, I don't have a down payment,"
Okay.
we'll qualify them on that program.
Okay.
You know, at closing, we do a first mortgage and a second mortgage, but it's what's called a silent second.
Okay.
Meaning there's no payment on that second mortgage.
Okay.
And then after a certain amount of time,
It goes away.
it goes away.
Okay.
So
That's
it's usually
what I,
about 3 years.
That's what I thought you were going to say, but I wasn't sure exactly.
It's usually about 3 years. And that's how a lot of the down payment assistance programs used to be.
Okay.
But now they started doing it to where they make you repay it at some point, no matter what.
Yeah.
So these new programs, and that's why these new programs have come about. That because they don't want to have to make you pay it back.
Yeah.
Because it
good.
doesn't make a lot of
Yeah.
sense. You know what I mean?
sure. Yeah.
So we're doing quite a few of those, and with the FHA loan limit going up here in Clark County to as much as it did, it went to 524, 225,
Okay.
which means if you're only putting 3.5% down, your down payment or your purchase price can be about 543, 200. So
Really?
you can buy a house for zero down at 543, 200. It's a pretty advantageous thing. FHA loans are much more, they're advantageous to people
Right.
that maybe have some challenges, right?
Uh-huh.
Whether it's credit challenges, job challenges, maybe they have gaps in employment, things like that.
Right.
And so, we use the FHA loan a lot for situations like that.
Okay. All right.
But they're there. They're
Wow.
absolutely there. Yeah.
So, okay, if you could look into your crystal ball,
Yeah.
I know you can't, but if you could, what do you see happening in the future?
In the future with as
In-
it pertains to real estate,
Yeah. In Las Vegas.
well, it'll continue to go up.
Yeah.
Well, over time, real estate has always continued to go up.
Okay.
And it will, there are times, like in every market, nothing ever goes up in a straight line,
Okay.
right? You might have, a couple
Yeah,
good
little
years and maybe it goes
plateaus.
down a year
Yeah.
or two and then it
Right.
goes up. But over time, it's always going to go up. I'll give you a little story here.
Yeah. Good.
So in 2004,
Yeah.
I bought my first house for $302,000.
Okay.
And it was a 1,400 square foot house. That's right in the middle of the boom, right? and so I'm like, wow, like how am I investing this much money in a
Yeah,
house?
really.
But I
Wow.
did, and we're going to live in it. So we ended up moving in 2012 to another house, a bigger house, because we had some kids and stuff like that.
Sure.
But I kept that house as a rental.
Okay.
But after the whole financial crisis and the
Right.
mortgage crash,
Exactly.
I was upside down, I don't know, 100 grand on that
Were you?
house, something like that. And
Some people were a lot more, weren't
a
they?
lot more, yeah, somewhere. And so I didn't want to foreclose or short sale.
Yeah.
So I rented it out, and I was upside down by about $1,000 a month that I was paying out of my pocket. But I was trying
Well,
to
it made
stick
you
it out.
hustle, didn't it?
It did, yeah. I didn't because I didn't want to do I didn't want to
Yeah.
do the short sale or the foreclosure. And so finally in 2019, a good friend of mine, because obviously I know a lot of real estate agents, a good friend of
Right.
mine owns a real estate company, and he knew I'd been wanting to get out of that
Right.
property as soon as I could. And he's like, I think at this point I can get you out without it costing you any money. You can break even.
Oh, thank God.
I said, sell it, do it.
I
Just
mean, that had to
get
be
rid of it.
just
Yeah. And
That was
so now
heaven.
that property, if I had kept it, would be worth about $140,000 more.
Oh.
And I'm okay with it.
Yeah,
I'm okay
yeah.
with it. It was a good lesson learned.
Yeah.
But the biggest lesson I took away from it is that real estate is going to continue to appreciate.
Sure is.
I mean, there's really no reason why it can't. Now,
Yeah.
there's always going to be market corrections and adjustments. Okay.
Uh-huh.
But I mean, the biggest adjustment we had was during the financial crash, and look where we are now.
Yeah.
I mean, properties are worth way more than they were at the boom at
Yeah,
that point.
true. Yeah.
So crystal ball.
Yeah.
If you're thinking about buying a house,
Yeah.
do it now.
Yeah.
If you're thinking about getting an investment property and building wealth, do it now.
Okay.
Because
So
even
don't wait, is what he's trying to tell you.
Absolutely not.
Get involved.
because think about it.
Yeah.
If you wait, you're gonna pay a higher. If you're waiting for lower rates,
Yeah.
okay, you're gonna end up paying a higher price, and that's gonna offset whatever the rate decrease is.
Sure.
If you buy now, you can always refinance at a later date
Right.
when rates come down.
Yeah.
And then you have that appreciation locked in.
Right.
And I think that's where a lot of people kind of miss is they think, oh, I'm going to wait for rates to come down.
Well, see, last time when we talked, when you said it's not connected, most people think it's, when the Fed.
The Fed,
that's
the
not.
Fed rate, it's just not. And
Yeah, now you know why I have it back.
but you know what? I get it. I
Yeah.
understand that. When you
Yeah.
watch the news,
Yeah, that's what you think.
you're just assuming
Yeah.
whatever you're in shopping for at that point, you
Right.
think the Fed has control over that
they
rate.
don't.
So it might be a car,
Yeah.
right? It might be credit cards.
Yeah.
It might be a home. So you're just automatically going to
Yeah.
connect those two things together.
Yeah.
And so I get it.
Yeah.
But that's why we try to get out and tell people and make sure people
Yeah,
know, and that's
well-
why we come on your show
Yeah,
and
I'm really
let
glad to
people
have
know
you on.
because it's an important thing for people to know. The news doesn't tell you.
No.
You know, the news just says, "Well, the Fed's going to cut
Did
rates."
you see? You heard it here first. Yeah.
Yeah. So
Yeah.
I've dealt with it my entire mortgage career because that's always the call I get
Right.
from people. You know,
Yeah.
well, the Fed said they're going to raise rates or cut
Right.
rates,
Yeah.
and so just
Yeah.
explain it to them, and people
Well,
appreciate it.
What new products do you have? Is there anything that's new that you can give us a little bit of a, like a surprise of what's new?
An aha. Well,
Can you or can't you? Maybe just a little hint would be nice.
yeah. Well, I mean that DSCR program is
Is-
something
that's
that
it.
well,
Yeah.
it's the newest, but
Yeah.
we also have for self-employed borrowers, because self-employed borrowers have always been at a disadvantage when it comes to qualifying for mortgages.
Okay.
And so, because the way we qualify like a W-2 wage earner, like someone that works for a company they don't own, we
Right.
give them we qualify them with their gross income. So if they make $120,000 a
Right.
year, we give them $10,000 a month to qualify for the income. I mean, we know they don't take home $10,000 a
Right.
month, but that's what we qualify them with. When it comes to self-employed borrowers, we have to use the net income off of their tax returns.
Oh, okay.
And we all know after deductions and expenses,
that's
that number
hard.
is just not even close to what you
No.
actually make.
No.
And so self-employed borrowers have always been at a disadvantage when it comes to qualifying for a traditional mortgage. So one of the other things that has come up that's
Yeah.
also a non-QM loan is called a bank statement loan.
Okay.
And so the way we qualify is for self-employed borrowers.
Okay.
The way we qualify these loans is we look at the deposits on the bank statements.
Okay.
That are true,
true
business
yeah.
revenue deposits.
Right.
Not returns from Amazon or
Yeah.
draws from
The
a
real deal.
credit line. Yeah.
What he's trying to tell you
the
is
real
the real deal.
revenue.
Yeah.
Yeah. And so
Yeah.
we look at those deposits, and that's how we calculate the income on these loans. We're
Okay.
doing quite a few of those too,
Are ya?
because people, when after you take your rightful deductions and your rightful expenses,
Right.
in order to get your taxable income down, it cuts a lot of that income out.
Yeah.
And so, but the top of the line, which is your deposits, right?
Right.
That's what we're looking at, and that's
Yeah.
where we start. So really, it's just kind of leveling the playing field. The rates are a little higher, but not a lot.
Mm-hmm.
Half point, something like that, above like a normal traditional Fannie Mae or Freddie Mac
Sure.
loan.
Absolutely.
But we're doing a lot of those too. We're also doing quite a few ITIN loans, individual tax identification number. So when someone comes here from another country and they've been working here, they apply for an ITIN. And once they get that and they've been working under that number for a while, paying their taxes, we can qualify them to buy a house too.
So from another country. Mm-hmm. Oh, that's good.
Yeah. So if they don't have, if they don't quite have U.S. citizenship yet or
Right.
permanent res card or
So
something
like
like that.
they're on a visa or something like that.
Well, visas we can qualify on just a normal traditional mortgage.
Oh, you can?
Oh yeah. So depending on the
I'm
type of
learning
visa,
new
yeah,
things. I really
yeah.
am.
On visas, we treat those just like U.S. citizens
Okay.
in most cases.
See, there's hope
so,
for you.
Yeah. So we do a lot of those too. It kind of depends on when someone comes to us. The most important thing I always tell them is you got to give me the story.
Yeah.
Okay.
You gotta
and
tell
you got to
the
hit me
truth.
with all the information.
Yeah.
Because
Don't leave
I
anything
can
out.
structure it properly.
Yeah.
But you gotta give me the information.
Right.
And sometimes borrowers leave information out.
Right.
Which ends up costing us in the end.
Yeah.
And
then
so,
you call them and say, maybe you wanted to tell me about
Yeah,
this
yeah.
minor little detail.
Exactly.
Yeah.
And
It
I
just
I
slipped
get
your
it.
mind.
Yeah.
Yeah.
But I understand. Like you
Yeah.
sometimes don't feel like it's important to the scenario.
Right.
One of the biggest problems that we have with clients that are trying to buy a home. So we'll get them all pre-approved. We look at their, pay stubs, W-2s, tax returns.
Yeah.
Everything looks good. Give them a pre-approval letter. Show them what the numbers look like, and they go out and start looking for a house.
Oh no.
And then all of a sudden they go and hit Home Depot and start buying appliances
Yeah.
and
And the next
go to the
thing you-
furniture store, yeah. Or they go buy a new car, or they change jobs.
You can't do that. No.
can't do that.
Leave everything alone for how many
we have
days?
we have a
90
document
day?
until you're closed.
Until you're closed.
Until you're closed.
Remember that.
Yeah, we have
until you're closed.
That's important, very important.
Yeah.
We have a document that says the do's and don'ts
Yeah.
when you're buying a home.
See, you're smart. Give it. What do? Give it to every
give it
one
to
of
them
them.
once
Say,
they're pre-approved,
read this. Sign on the bottom that you understand what I just told you.
You'd be surprised.
I believe you.
And they don't
Yeah.
think about it, right?
Yeah.
Like one time I had a client that got married in the middle of a transaction
Oh my God.
and just didn't tell us. And we were like, well, you didn't think to tell us that?
That's important.
She's like, why would it matter?
Oh.
Well, it's community property state.
Yeah,
and,
yeah,
So it's, but again, that's our job to make sure that people know, you do want to do this, you don't want to
Yeah.
do that. I always just recommend when you're out shopping for a home, you're pre-approved.
Right.
If you're going to do anything as it pertains to your job, your income, your credit, your assets, call us first, and we'll tell you if it's going to impact.
If it's a yay or a nay.
Yeah.
Yeah. Well, see, that's smart. But you're right. A lot of people don't think about that.
It happens.
And
a lot.
then it kills your chances, doesn't it? All of a sudden, then boom.
It has, yeah.
Yeah.
There's been times where we've lost transactions because we didn't know about something or they added debt on, and now their debt ratios are out of line. They can't. It's
Yeah.
There's nothing we can do about it at that point.
Wow.
So, but that's why we make sure we tell them,
Yeah.
just don't do anything without letting us know.
Yeah, that's for sure.
That's what we're there for.
Yeah. Well, if people want to get a hold of you, how do they do that?
Best way is my cell phone.
Okay.
702-808-8328.
Okay.
Call, text. Obviously we have our cell phones on us all the time.
Most people do.
yeah, and
text,
so,
call, the whole 9 yards. Yeah.
I like to, I try to pick up the phone as much as I can. Obviously if I'm on a call or something like that, I might not be able to pick up, but I'll
Right.
call back, and
Yeah.
shoot me a text and we'll schedule a time.
Yeah.
And the process is pretty simple.
Yeah.
We
Okay.
when someone calls us, I usually like to, talk to them and do what I call my warm and fuzzy call,
Yeah.
right? Which is basically just,
Letting them know.
yeah, I
you're
mean,
there for 'em and
here's who
you
I
are.
am. Here's my team.
Yeah.
Here's who's going to be helping you. Do you have a job? What's your income? What's your, do you have assets? Do you have down payment?
Right.
Basically, just kind of going through
Normal
the basics,
questions,
right?
yeah.
Like, are we even
Yeah.
in position to take a loan application?
Right.
Right, because if you don't have a job,
Why do it?
yeah, I'm not going to pull your credit for no
No.
reason.
No, it's
And
not gonna work.
once we actually get
You
into
need a
the,
job, yeah.
well,
You
not
don't-
necessarily.
Unless you have lots of money in
you
the
can
bank.
have other forms of income, or you can have
Okay.
a co-signer.
Yeah.
But I guess my point being was, when I go through that call,
Yeah.
there may be disqualifiers, and
Yeah.
so I let them know at that point. And then
Yeah.
nowadays, the way we do loan applications is we actually send a secure link. Because of all the identity theft
Sure.
and fraud.
Oh yeah, there's a lot of it out there.
Yeah, we don't do it. We don't collect documents and do things like that as much anymore. We send a link.
Right.
That link will ask you all the proper questions. It'll also provide a secure manner to upload all your documents, like
Okay.
pay stubs, W-2s, tax returns, asset statements, all that. And it's a lot more secure.
Yeah.
And then that gives us all the information we need. And then we put together the application, and once we do that, we issue a pre-approval letter along with some detailed written estimates that outline estimated rates, fees, monthly payment, cash due at closing. So that way, before you go get in a car and fall in love with the property,
You know what it's going to cost.
you know what it's going to cost you, because
Yeah.
that's the biggest thing. You might qualify for a more of a payment,
Right.
but you may not want to pay it.
Right.
But if you go, find some beautiful house that you
Yeah.
fall in love with, and then you
And then
realize,
you can't buy it.
yeah, it's
you
$500 more than
Yeah.
you want to,
And
even though you could qualify for
Yeah.
it. I've seen it happen a lot of times,
Yeah.
and so it's just important for people to understand before they go start shopping for a house
Sure.
what to expect.
Yeah. Well, you've got so many important things and details that people really need to know. I'm really glad you're on my show.
I appreciate
Yeah,
it. I really do. I appreciate being
we've
here.
got like a lot of different things to talk about.
yeah.
So I'm going to have you back again.
I appreciate
and,
that.
every time you come in, I always learn something new from you. I really do. But this, right now with the stocks up and down,
Yeah.
I mean, this has to be like being on like a rowboat on the ocean, trying to
yeah,
figure out like, what am
roller
I going
coaster.
to do next?
Yeah, I mean, we don't know what to expect, but
Yeah.
you know, by the time I'm on your show again,
Yeah, yeah.
we should have some more information.
Okay, well, I hope to have you back soon.
Absolutely,
And
I
thank you
appreciate
for
it.
being a guest today.
Thank
I
you.
really appreciate it.
Thank you.
That's our show for today. Hope you enjoyed it. We'll see you soon. Bye.
So grab your headphones, let the journey start. With Suzy's Vegas tales, she's stealing the heart. In the city of dreams, let's laugh and play. Suzy's Las Vegas podcast, come join the sway.